Hello friends, James Stevenson here with my Q1 2024 Tesla earnings forecast review. I ran out of time to do this. I hastily finished my forecast earlier today and made a bunch of charts with Loki's help, of course, as I check in with Loki, who is curled up in bed sleeping. He's so exhausted from having helped me with the forecast today. I'm going to share my desktop with you and show you my charts this way instead of doing my 69 tweet forecast thread that you may be accustomed to seeing me do. And I'll share with you the earnings that I'm forecasting. And folks, it's a toss-up whether Tesla is going to have positive earnings in Q1 of 2024 or whether it will be a loss for the first time in years. It might be a real small loss. We'll see. What Tesla reports when the earnings come out on Tuesday afternoon. So, without further ado, let's jump into it. You know, Q1 2024 was a bad quarter. You can see it on the screen, these diagonal lines racing downwards. Don't look great. A few stories behind that one. The Suez Canal was shut down for a while. Giga Berlin had problems with sabotage from environmentalist groups that are very misguided into thinking that was a good idea. And, a very weak economy suddenly in China, leading to every automaker there having huge sequential declines, meaning from the previous quarter to the current quarter, BYD was down 42%. Elon reminded somebody who was complaining about Tesla's China sales being down in Q1 sequentially, but that happens due to seasonality a lot of the time. If you go back over this chart and look, Q4 to Q1 is a pretty popular time for sales to decline substantially. It happened in 2019, it happened in 2020, before COVID really brought it down with some Shanghai lockdowns here. The one that looks the most pronounced in 2022 is Q2 due to some more Shanghai lockdowns, but there's almost never a Q1 that's great relative to the Q4 that came before it, probably because it's so cold during Q1. A lot of folks don't feel like going car shopping right then. They just want to worry about a car later. Just normal seasonality, but you can see this drop is more than just regular seasonality with, a pretty serious decline there. All right, let's go to the next slide here. That's not the way to do it. The way to do it is for me to click here and then hit my down arrow. I'm using a PowerPoint that I put all these charts into. I just didn't have time to save them all as PNG files and then upload them one post at a time into a 69 tweet thread. That takes me about 4 or 5 hours per quarter just putting captions on each of those and uploading them all, etc. And I am out of time. I have to post this before earnings or it'll be news no one wants to see. Tesla Global sexy deliveries by quarter, S3, X, and Y. How are they looking? Well, they were down in Q1 of 2024, which you see here, but I've got the forecast rising in the future. So if you're a long-term investor with a long-term mindset, you don't care that Q1 is going to be a pretty awful quarter. You expect that probably by now. Here's another chart showing Model 3 versus Model Y. I'm going to try and keep the pace of this video up because I have so much to cram into it. A lot of times I'll do like a 20 or 30 video forecast review series. You're going to get them all in one in this video. As you know already, if you've looked at the time scrubber, I don't know how long this video is, but you do. So here's Q1 2024. You can see 95,350 is what I'm estimating for Model 3s, and 274,433 for Model Ys. And I say I'm estimating them just to minimize confusion in the Tesla community, and because Tesla does not report at this level of detail. Once quarters actualize, I just make them whatever Troy Teslike says they were. rather than independently guess at them and then have two different sets of numbers out there, so that when you see charts that are just actuals by model, my numbers will at minimum match Troy's, and that'll be something. Right. But for the rest of the year, returning to about the average from the past 4 or 5 quarters, something like that. You can see this number was actually a little lower than it was 5 quarters ago, Q2 of 2022. So not great for Tesla in Q1, and I think all the numbers are going to be down, like we've already seen with the production and deliveries. Here's the last chart that I want to look at for right now, the Tesla quarterly production and deliveries chart, just to draw your attention to Q1 of 2024 here, with the deliveries so much lower than the production. I mean, they've been lower in a lot of recent quarters, with like one exception since Tesla started ending the wave. The reason these were all so close to each other was that Tesla did the wave at the end of every quarter, trying to deliver every single car that could be delivered before the quarter was over. And they stopped doing that to try to get to a more normal amount of ending inventory, meaning more like 30 days of ending inventory. And they're actually over that for Q1 of 2024. I think due mainly to that Suez Canal problem, putting boats behind schedule, having to reroute around the southern tip of Africa to get where they were going. They didn't make it to their buyers before the end of the quarter. So what I'm forecasting for Q2 of 2024 is for that to flip-flop and for Tesla to deliver more than they produce in Q2 as all of those ships arrive and unload and deliver Teslas to happy new owners. All right, so probably by now you're like, just tell me what the earnings forecast is, James. So fine. I'll zoom in here so that you can see this better. And I'll take it off of 2023 because that's old news. And I'll show you my 2024 forecast here so that you can see there's light at the end of the tunnel, but that I'm heavily penalizing Q1 for those problems that we talked about earlier. And because Project Highland, which was never called Highland, it just grew legs and ran, that name, the project codename Highland, which Tesla never used. The Model 3 refresh from Fremont in California went very slowly and produced not very many Model 3s during the quarter by all accounts. But that's very costly to do that because you're running at low capacity. Same for Giga Berlin, running at very low capacity for a while due to sabotage, but your costs still keep running, whether you're producing vehicles or not, stuff like that, contributing to probably a single-digit gross margin percentage is what's in my forecast. Now, maybe Tesla will have managed that situation a lot better than I think, and it'll still be a number in the teens for gross margin, but I don't expect any improvement versus what we saw in Q4 until we get to the remainder of the year, back up, closer to the 20% where it's been historically. So what about for the automotive sales? I even put over here, including regulatory credits, and that's not true anymore. So we used to have automotive sales including regulatory credits, and then Tesla just started reporting the regulatory credits on their own line. So I'll just leave that descriptor alone. So I'm forecasting 269 million worth of regulatory credits and $16 billion, $91 million worth of automotive sales for Tesla in the quarter based on the mix of models that I'm assuming. Then leasing and resale were very low in Q1, so expect this number to be lower than it's been in the past and to stay that way, I think. Maybe in this economy, people just don't want to lease as many vehicles, or maybe Tesla doesn't want to have that many leases out right now, leading to total automotive revenue of 16.8 billion, way down from last quarter's 21.5. Energy generation and storage maybe the only bright spot on the production and deliveries report that we got was that it was an all-time record for energy storage. 4.053 gigawatt hours delivered, I think, of energy storage, which I had to tie out to earlier today, which is how I still remembered the number. $1.79 billion worth of revenue is what I'm forecasting to go with that and with the solar panel sales, etc. Q1 is a pretty poor quarter for solar installations for the same seasonality reason as automobiles. But the mega pack helps to be a shield against that seasonality because it's more for utility scale, grid supplier energy utilities, etc. Services another. Just shy of $2 billion is what I'm forecasting for Q1 of 2024. I do have a little less than that in for Q2. We'll see how that goes. Then for total revenues here, $20.6 billion this quarter, growing to better numbers later in the year as Tesla sells more cars over the last 3 quarters of the year. Q1 is often the worst quarter of the year for Tesla, and I expect that to be the case again this year. I'll keep going down the page until I get to deliveries, I guess. So here's the automotive cost of sales numbers. I would normally spend a lot of time talking about these, but in this case, I guess I'll just show them to you. Then we've got research and development. Tesla is spending like crazy on research and development right now, so I would expect to see a big number hit here. Now they're capitalizing a bunch of their neural net project spending. So that's project capital that'll become an asset and get depreciated over time as that asset value depreciates gradually. Selling general and administrative expenses. I've got a bigger number in Q1 and then a smaller number in Q2 as a result of some layoffs hitting in Q2. There might be restructuring expense associated with that, so you can't expect a giant decline here. And then Tesla will continue to grow, so I do have higher numbers forecast in the second half of the year. So 2.5 billion almost worth of total operating expenses is what I expect, leading to a loss at the income/loss from operations line, or an operating margin at -4% is what I see coming. Then Tesla will have interest income from their investments. If they get a similar number to what they got the last couple of quarters, it'll be about 0.3 billion, offset by some rising interest expense. You can see the trend here is up on interest expense. You never know what to forecast for other income/expense net, so I've just got a -$51 million placeholder in there. We'll see what Tesla reports on Tuesday. Making income or loss before income taxes a little better than the income or loss from operations due to the interest income I'm forecasting. Provision or benefit for income taxes. If you made money on this line, you would expect to see a positive number here to pay taxes, positive expense. But I have a negative number here, a contra expense, because this is a loss and you don't pay taxes on losses. You actually get to save those up to offset future profits, which is what that -$71 million is doing there, making a net income or loss after taxes of $565 million, which is what I've got for my GAAP net income number on 3.185 billion shares outstanding. That would make an 18-cent loss per share, GAAP earnings per share basic. And if you want to know what those are, outstanding diluted, there's the GAAP earnings per share diluted, 16 cents. That would be a more normal number to see. We'll get down to the non-GAAP income, which is the one Wall Street likes, in just a minute, though. I've got some other metrics that may be of interest to you here. I think I'm going to gloss over those to get you back to the charts. You may want to see more charts and less fascinating tables of numbers. So there's no CEO stock compensation because Elon earned all of his stock compensation years ago and has not been getting paid, or Tesla has not been expensing any. Like, it's going to be very interesting if it's going to be awful if the shareholder vote fails to reinstate Elon's compensation package or to reauthorize or whatever word they used for it, because Tesla has already expensed $2.283 billion of those stock options. And if the rescinding that the Delaware judge did holds, and if the shareholders don't authorize that stock compensation again, I don't know what Tesla is gonna do to reverse $2.283 billion worth of expense. I mean, maybe they have to do it now. I don't know. I mean, it's a very unusual topic. They do not cover that in your accounting class when you go to get your MBA. For sure, that's a very unusual position to be in. So I don't know if Tesla needs to restate their financials to remove all that expense they declared in prior years. If you know, leave me a comment below telling me, accounting experts out there. 1.34 billion of total SG&A expense is what I'm forecasting for Q1, with zero point 0.1 of that being other SG&A stock compensation, and the 1.24 being non-stock SG&A compensation. So this is the Elon only line. This is the everybody else who would hit SG&A expense line. What stock compensation do they get? And then what's the rest of their regular salaries, wages, benefits, taxes, etc. Then there's the stock comp in cost of revenues section. So everybody who works at a factory for Tesla around the world gets stock options, I guess, unless a Delaware judge takes them away. Stock comp in research and development, 207 million is what I'm forecasting there for Q1, making 482 million of total stock-based compensation for Tesla employees not named Elon Musk in Q1, leading to pretty much a break-even number at the non-GAAP earnings line. You throw the stock-based compensation out of the GAAP earnings to get to the non-GAAP earnings number. So that's going to be 2 cents at a negative 0.4% non-GAAP earnings margin is what's in this forecast. And of course, once the numbers get this small, you get wacky results below that for anything trying to do metrics on a very tiny number against other numbers that are normally going to be bigger, right? So you see some of that happening with my PEG ratio metrics down here. But I promised we would go back to the charts after I got to the non-GAAP earnings number. So there you go. Negative 2 cents is my non-GAAP EPS number for Tesla's earnings for Q1. And we'll see what happens. Okay, back to the charts. Back to the pretty charts. Global Tesla deliveries 2018 through 2024 Q1. You can see this deliveries number is bad versus the previous quarter. But in the context of the past several years, it's still a pretty high number given the circumstances, right? A lot of stuff went wrong in Q1 of 2024, and for it to be down to only this level, when you look at it at this scale, isn't as horrendous as maybe we've been hyping ourselves up into thinking it is. Now, yeah, if Tesla has to report a loss, that's going to be memorable for a while, and Tesla Q will have a field day with it and celebrate and throw parties or do whatever they do. Here's the Tesla quarterly revenue chart. We don't know what the Q1 revenue is yet. We'll find out on Tuesday when Tesla reports. But for 2023, the full year number was $96,773 million. And you can see how that compares to every previous year. And this chart has it by quarter as well, divided out so you can see proportionally how much of that happened in the Q1s versus the other quarters. And this was, well, we'll find out how Q1 rates against the prior year. Probably it'll be down, But in 2023 Q1, that was a record for any Q1 ever. It'll be a tough one to beat, probably, given the number of deliveries Tesla made. Here's my adjusted EBITDA by quarter. We didn't make it down that far on my model to the adjusted EBITDA line, but you can see that still is a positive number because it is the earnings before interest, taxes, depreciation, and amortization. If you add all that back, then you get a positive number instead of the maybe it'll be a loss, maybe it'll be a small profit that I'm forecasting. But in the future, it goes up, so that's good. Here's a chart showing how Tesla makes its average dollar of revenue. A pretty smooth chart here, I think. You can see how that's been trending through the end of 2023 here, and how I'm forecasting that to keep moving. This is on a 12 trailing month basis, which does an interesting thing on the next chart. For Q4 of 2023, it breaks my chart that there was a one-time favorability for a tax item that's non-cash. $5.9 billion was the adjustment, I think, 5.93, something like that, due to all the losses Tesla had made in prior years, you know, from the time they went public through 2019 or whatever. They had lost a lot of money. They'd been saving that up, and the IRS lets you offset those losses against your profits, and you can do a one-time, not a gain, you can do a one-time adjustment, which is what Tesla did in Q4. But it happens 4 times on a chart that's trailing 12 months and quarterly, because this quarter will be in the trailing 12 months in this quarter and this quarter and this quarter and this quarter before it rolls off in Q4 of 2024 and is no longer part of the trailing 12-month sum, right? So that's what's breaking the chart, if you see that there's some weirdness happening here. Then I've got a chart showing non-GAAP earnings per delivery over the trailing 12 months. And you can see what that looked like at the end of 2023. Pretty good when you include that one-time tax item, which you do when you're looking at your non-GAAP earnings per delivery, right? It's in there. And probably we would bottom in Q4 of this year and then do better following that, because this will be the first quarter that doesn't include that favorability from Q4 of 2023. So it'll be the lowest. And then after that, you'll see it bounce back up again, is what that chart's showing you. Here's the same chart, except if you throw the regulatory credits out as well, and you don't count those as being profit per vehicle, they are profit per vehicle. But if you were to throw them out, Tesla would still be profitable, is the point of this chart. For a few years back there, the short sellers, haters, and trolls would say, yeah, but if you throw out the regulatory credits, they're not profitable. This chart was intended for that audience to say, yes, Tesla is still profitable, even if you were to throw out the regulatory credits, which are now a pretty small dollar amount relative to how much revenue Tesla is earning most quarters, you know, about $20 billion in a normal quarter these days. At just the automotive revenue line, and then there's energy and services and other. Here's a chart showing the inventory, production, and deliveries for all sites and models all the way back to Q1 of 2018. And the interesting thing to point out here is this pink block here is a really large amount relative to the green block sitting on top of it. What do these colors mean? Well, the blue blocks are giving you the beginning inventory. So at the start of the quarter, how many finished goods inventory, how many vehicles were available to be sold already on the first day of the quarter because their buyers hadn't come to pick them up, or because they were on a ship or on a car carrier, or in a parking lot at a dealership, whatever. That's the beginning inventory. Then your production stacks on top of that blue bar. So the orange bar is showing you how many you produced, and that becomes how many there were available to be sold during that quarter. You can't sell more than the number you started the quarter with plus the number you made during the quarter, because that's all the vehicles there are. Then the green bar is the deliveries, right next to it showing, okay, if you delivered this many, then of the vehicles available to be sold, the rest have to be in the ending inventory. So that's what the pink bar is. Ending inventory here is a really large fraction of this total here. And both sets within each quarter will be exactly the same height, which is why you see all these pairs of bars are exactly the same height, because your beginning inventory plus your production must equal your ending inventory plus your deliveries. That's, if those don't add up right, if those don't balance, something has gone wrong with one of those numbers and how it was calculated. So I'm expecting this to normalize soon with Q2 deliveries exceeding production. So this green bar is going to be bigger than the orange bar in Q2, and that will lead to a reduction in the ending inventory. At the end of Q2, there will be less cars available for people to buy than there were at the end of Q1. Okay. This next one is the scariest chart in this whole set. I looked at it and went, ooh. Tesla average revenue per delivery versus automotive gross margin, excluding regulatory credits as a percentage of revenue. So Tesla's got a bunch of stuff working against them this quarter. So we've talked about them a few times already, but I'll mention them again. You got the Suez Canal problem. You got the Model 3 refresh happening in Fremont, knocking production way down. S and X sales were pretty poor in Q1. Sales in China were pretty poor in Q1, right? So you had a lot of that stuff happening. I feel like I'm forgetting one. Well, you know, Cybertruck was trying to ramp up in Q1, so pretty high costs relative to what you're getting for those Cybertrucks at this scale. They need to ramp up past break even before they contribute any gross margin to Tesla. So as that happens, as all those things work themselves out, the automotive gross margin, excluding regulatory credits, ought to bounce right back to where it was and continue growing. But for Q1, it's going to look ugly. Q1's going to look ugly. But sometimes you have an ugly quarter, right? That's happened in the past. Here's another one, automotive revenue and cost of sales per cash delivery, excluding leased revenue and units sold and regulatory credits. It's not much of a story here for my forecast for Q1 of 2024 because the leased vehicles were so few in number. It was either 2% or 1%. So 1% for 3s and Ys, 2% for S, X, and Cybertruck being leased. Everything else was a cash delivery. So you're not getting a very different story on this chart than you would just looking at the totals, because the leasing was such an immaterial amount. Here's what the regulatory credits have been looking like. So in Q4, this is how much we had for regulatory credits. Here's what I'm forecasting for future quarters. Kind of a really unusual Q1 number here, but this is how I have it forecast. It doesn't look crazy wrong. It could keep going up. I don't forecast it to keep going up. But some of the highest regulatory credit totals we've ever seen have happened recently, fairly recently, even though back here Gordon Johnson was calling regulatory credits one-time regulatory credits that are going away. I made a meme, I think, in 2021 about how Tesla Q was saying that the regulatory credits were going away and they would be zero by 2022. And then, you know, 4 of the 4 highest regulatory credits Tesla has ever reported happened since then, right? Pretty funny. Here's a chart showing Tesla next 12 months non-GAAP EPS unadjusted. These are my super confusing charts because of the axis looking like, wait a minute, 2023, that's not the forecast, that's the past. That happened last year. Well, no, if it's the next 12 months, it hasn't happened yet. The 12 months following Q1 of 2023 haven't happened yet. Only 3 of them have. This one, Q1 of 2024, hasn't been reported yet. So I've got that at about $4, and then troughing in Q4 of 2023, meaning the full year 2024 will be the lowest number in a good long while. And then after that, it'll be bouncing up. A lot of these forecast or earnings growth estimates rely on FSD getting a lot better and a lot more people buying it, right? The take rate on FSD goes up. More people subscribe monthly for $99 or whatever the future price of FSD will be. And that's gonna fall straight to the bottom line as profit because there's no variable cost associated with one Tesla buyer purchasing FSD or subscribing to FSD, right? Tesla gets that revenue and then there's maybe 1% variable cost associated with it. So you get a 99% profit margin on selling FSD to people. Pretty good business to be in. Most companies, even software companies, don't manage 99% variable profit margin. But Tesla may be able to do a lot more of that next year, which is what that's forecasting. Or sooner, maybe. Maybe they'll have the neural nets and the AI make such great strides this year that it'll happen sooner than everybody thinks. And this is the same chart except on a log scale. So you can see a lot of this growth happened 2019 through 2021. And the next leg up will be a year from now, is what I'm forecasting, with pretty similar earnings per share for most of the last 5 quarters and for the next 4 or 5 quarters before it takes off again. Here's my FSD revenue at time of purchase per delivery chart. So I had these numbers higher back in 2018, 2019, 2020. There was a lot more of a sense of urgency of, hey, this FSD is going to happen soon back then, and a lot more people were buying it, I think. Recently, that's been a lot less true. Q4 and Q1, you can see these are pretty low numbers, FSD revenue at time of purchase. But I do have that ramping up first in the US and then across the rest of the world as Tesla is able to roll out FSD features to more markets around the world. They'll also be able to claim more of the deferred revenue from people who have already bought in those geographies. Here's a cash flow chart. This is showing capital spending and free cash flow in addition to total operating cash flow. Now, you may be looking at this and saying, James, there's only 2 bars there. How can you be graphing 3 things? Well, the name for the stack of the 2 is operating cash flow. You take the operating cash flows and then you subtract the capital spending, which is the darker bars on top, and that leaves you with free cash flow on the bottom. Free cash flow can be negative. You can see the last time it was negative was Q3 of 2018. It's not impossible that we'll see a negative free cash flow number for Tesla this year. I don't forecast free cash flow because it's a waste of time to forecast free cash flow. Just ask the fraud hiding behind the fake name Brad Munkin, who was off by $4.5 billion in 2 quarters last year, something like that. Got it directionally wrong. He forecasted negative, and then of course it was positive both of these quarters. So he missed it by a lot more than $4.5 billion then. Oh, this is the 12 trailing month totals here. So you may not see the 12 trailing month free cash flow number go negative, but you may see a quarter with a negative free cash flow, which happens to most automakers a lot. You go look at Ford or GM or pick your favorite legacy automaker. You'll find lots of quarters where they had negative free cash flow, just depending on what their operating cash flows looked like and what the timing of their capital spending looked like. If they want to accelerate a lot of capital into a quarter, then the capital spending will exceed the operating cash flows, and that'll produce negative free cash flow, right? Here's your Stevenson indicator update if you're looking for one. This is what Stevenson indicator looks like right now. So you can see before the bear market began, that was a pretty effective support line. And then the bear market began. The 52-week low happened at $106 on January 3rd of 2023 back here. And then, yeah, it's been a rough few weeks and months here for Tesla stock price lately. I know you can't read the chart here, so I tried to illustrate with a couple of notes what the time period is you're looking at. But Stevenson indicator began on March 18th of 2020, and you just add $1.69 every 3 trading days. That's it. That's all you need to know to figure out where Stevenson indicator is. It has never been a price target. I was pretty good about always mentioning that it's not a price target. It's not trading advice. Nothing I say is financial advice, for entertainment purposes only. Technical analysis is phrenology, etc. Here's a chart showing Tesla PE ratio, compression, and range. So you got non-GAAP, fully diluted, trailing 12-month basis, with the red line showing the quarterly high for PE, the yellow line showing the quarterly low for PE, and the dotted line showing the quarter ending PE. So in Q4 of 2023, the PE never got any lower than 38 or any higher than 55. That was the range that it traded in, ending the quarter at 52. It's got to be lower than that now with the stock price down so much. Here's a chart of Tesla operating expenses. You can see actuals through 2023 full year. And then my forecast is on here. They haven't reported operating expenses yet for Q1 of 2024. But you can see what I'm forecasting here is nothing crazy. I do have CEO stock compensation coming back into the picture at the end of this year. I'm going to have to move it, though, because they have missed now with the filing of the annual shareholders meeting agenda items. They don't have any new compensation for Elon outlined. So it'll be a year from next year's annual shareholders meeting before they'll be able to get Elon any compensation. I'm going to have to move all of this out by a year before he can get any new compensation, because if they don't vote on it this year, it's not going to hit the financials this year or for another year. Then research and development is the light blue bars here. That's going to grow. Tesla's going to spend money on R&D. SG&A excluding stock comp is the other big one. The darker blue line is the SG&A stock comp for people who are not the CEO. And the green is Elon's stock compensation, or how much of it got expensed. Now, you may have heard people talk about Elon's package being worth $55 billion or $71 billion, and these numbers are a lot smaller than that. That's because the GAAP accounting for stock compensation is based on how much the award was valued at when the plan began, and that's where that $2.283 billion number comes from. That's how much Elon's stock compensation plan was worth, meaning if you had bought call options back then that were as far out of the money as Elon's goals were for Tesla's market capitalization and for the timing outlined in the plan, then you would have needed to spend $2.283 billion to be able to buy as many shares as Elon is going to be able to buy if shareholders vote yes and allow him to buy all those newly issued shares. Yes, it will be dilutive, but if you don't pay him, you're stiffing him for 6 years of world-class productivity. That's my view on the topic. This chart's the same. It's just showing a few of those items: the CEO stock compensation, the SG&A stock compensation, and the SG&A all other, excluding stock compensation. So if you want to know just Tesla's SG&A, here's the chart for you. And for what I'm forecasting in the future, This is how Elon's stock compensation plan was expensed. If you want to pause this and check it out, these are the amount that got recorded as expense on Tesla's financials every quarter since that plan began at the end of March 2018. And then Elon had already earned the maximum allowable by the end of 2022. Here's what Tesla's non-GAAP EPS looks like. So this 481 would have been lower without that one-time tax favorability. That padded this number by about a third versus what it would have otherwise been. I've got about $3 in for my forecast for 2024 right now, including a real bad Q1, a Q1 loss. So it'll be a positive $3 EPS by the end of the year is what I have currently in my forecast, which will change. As we just saw, I got to move some stock compensation out. That'll help the earnings a little bit. Here's a chart of quarterly megawatt hours deployed. Tesla mentioned that this was a record. It was. It was barely a record, 4.053 gigawatt hours. So 4,000 megawatt hours is what the chart's scale says, was barely a record over Q3 of 2023 when it was just under 4 gigawatt hours of energy storage delivered. Here's a Tesla Energy Division per share metrics chart. So revenue versus cost of sales. This chart is just intended to show, hey, brighter days are ahead for Tesla Energy when they can build that mega factory in China and start delivering mega packs domestically within China. The revenues and the costs are going to go up, but the revenues are going to go up by a lot more than the costs are going up. So the span between these two lines is the gross margin for the Tesla Energy Division. And that's the end of this deck, which makes it the end of my video. So I will check in with Loki and see that he is still curled up in bed snoozing before I say goodbye and remind you to like the video if you liked the video. That'll help other people like you find and like this video. It's a virtuous cycle of social media likes that help tell the algorithm this content is valuable. So I appreciate you if you support me in that way, or if you support me by joining my Patreon or on Twitter, subscribing to me, or by joining my YouTube channel, as my two executive producers, Kathy Kitchler and Rebellionaire.com did. And I'll see you in the next one.